Hey guys, Stony here. Gonna do another little breakdown for you. Flavor today is GBP USD. Very messy morning. I'm sure you guys realized little fake outs, so we're gonna get a little extra knowledge here that we didn't usually like to push out. Maybe some order block knowledge and maybe some overshoot knowledge. So just gonna get right into it. Going into the market right now, we're looking at London Open. So at London Open, this is a viewpoint I was looking at. This zone has not really yet been created yet. So we really got that once London did open. So once I got that, this is our impulse move down on the 1 hour. So that's just a level that I'm looking for price to maybe reject at during a downtrend on the 4 hour. So we are currently retracing from a 4 hour higher high and our 4 hour zone to some other level that could be the 4 hour higher low, or it could be 1 hour impulse, or maybe an order block. So coming into the market, we woke up, and this is about what time I got to bed. My move initially was this order block. So the order block is this impulse move that pushed price up and created this big leg of breakout candles. So knowing if this zone was touched, we would probably most definitely get a reaction to some degree, and the degree of the reaction was probably going to be this level. This level is just a continuation of this level. When this level is broken, demand breaks, becomes supply, and then continues down as supply. So the move initially would have been trading this range, and the range pays out 40 pips, or depending what your stop at, a 3-to-1, a 4-to-1, something like that. So breaking down to the lower time frames, as you can see, we never really got the move I wanted, so we never touched it. There was some interim and middle of the area trading you could have taken. I'm not usually that type of trader, but there was moves there. Buddy of mine caught something right there in the middle. But I was waiting for that zone to get hit. When this occurred, I was peering other pairs, but this spike happened. This spike happened on some GBP news. I know they were having meetings this morning. It didn't really give us a good folder on Forex Factory or any website that you might use to check news. So we didn't know what caused it too much, but we knew it was news because the market was moving in a very obscure way. We got a very long breakout candle pushing 28 pips, and these candles were 5 pips a piece. So in the course of 5 minutes, you got 20 pips. I will say that whenever I see this, I'm looking for a correction. The market likes to correct. The market doesn't like to push up and say, all right, well, this is where we're going to be. It pushes through a bunch of orders that hadn't been touched, that weren't ready for that, and it gets pushed back down. So whenever I see a spike like this, knowing that we're in a bearish market overall for the day, I'm looking for a retracement trade. I'm looking for something that's going to push me back down to the order block. So the initial idea was to push back down to the order block and maybe take a long out of the order block for maybe a scalp or, a 1-to-1, something to get risk free and maybe make it a 2-trade day. Didn't play out exactly how I wanted, and I'll show you why. So cutting forward until we get to my initial entry. So my initial entry was about here. I did take it on, I believe, the 15-second time frame, but it was a break and retest of this range here. So the range does not include this double top. This double top are overshoots. Why is it an overshoot? Break, retest, no follow through, falls back in. Break, retest, no follow through, falls back in. You guys have got to remember that overshoots are not bullish. These are very bearish signs. It looks very bullish that price pushed up, but you have to remember that it could not stay up. So all of the buys that originated down here from the news spike did not carry price enough to get through this zone. It eventually did make it through the zone, and we'll show you why. I'm going to go ahead and highlight the trade that I took. Trade setup was a 3-to-1, basically, is a 2.5. I think my stop was a little tighter because I know I was inching closer to 3, but I just threw this back on here to give an example of this trade. I'm going to go to the 1 minute to show you the breakdown. The trade is taken at a break and retest of this range. Like I said, the overshoots are not at play. So the range I'm looking for is about right here. You could say it's right here. This is, I think, where I had it. This isn't counted even on the 15-second time frame because we didn't get a retest. So this was a little bit lower, actually. I do remember this guy right here getting touched. So we have a break and retest of the range. As you can see, it did range, and that is important to note that that shows you that people are fighting right now over price direction. So because of that, I was waiting for a break, a retest, come back through, and then follow through, take the move right here. And that's exactly what I did. So we got engulfing, and I took the move on this engulfing, which was a little aggressive because it did match up to these lows. So that's where my move was, because I do remember that candlestick being my entry candle. I was a little worried that we were going to tie these, but that's where we got in. And I think that changes our R a little bit closer to a 3. Yeah, that's about where I got in. We had to push down. I'll let it play out on a little bit slower of a motion, but you can pretty much see what's going to happen. We push up, and unfortunately, it pushes right back up through me. So that happens sometimes. I really could have waited for a better rejection. Better rejection would have been waiting for price to get back up to the zone and then bought on a retest of here. If I did that and didn't take this retest, I probably would have been a lot safer. That is notated in my notes. And usually I'm a lot better about it, but I feel like I was a little worried about price returning back to normal too quickly, and I wanted to catch that run. So a little case of FOMO, and it's good to understand that that's what happened, and it's good to understand that next time it's not going to happen. A good break would be this break here. A good retest would be coming back up into here. So when we came back up here, let me just make this a little less bright so we can see it. We came back up here, we got a retest, no engulfing, broke through, retested the bottom of the range and continued up. So right here initially was my sign that price isn't doing what I thought it was going to do, and that this wasn't the retest I really wanted. So it came back down. It must have collected enough orders to bust back through, or sellers just weren't present enough to keep price below. So it did retest the mid-range, come back down, give another one, comes back up, and it retests, no engulfing here. You did get an engulfing here, so even if saying we took the trade here, which again isn't enough of a breakout, these slight breakouts are just overshoots. So it wasn't enough of a breakout like this was. If this move would have printed a good engulfing, it would have been a much better entry. But this is what happened because of FOMO. So I took a 1% loss pretty quick on the day. I actually got up a lot earlier. I got up near London Open and saw this spike happen. And I think just being there kind of affected the way I took that trade, because I got a little FOMO heavy on that. But that happens. I'm not too worried about it. We had alarm set to catch price when it returned. When price returned, I knew that this was an overshoot. How do I know it's an overshoot? A common overshoot pattern is going to be a double top and then a retest of the double top. I've posted this on my Stony. I've posted this in groups I've been, and I've posted this to people who questioned it. It's always going to be a 1, 2, and then you're going to get a retest of that top or of the range that it created. So there's a line for the retest. The range itself, this being an overshoot, would be right here. I usually make my overshoot ranges red. Came up, retested. That shows me there's an overshoot. The overshoot does not mean that price will stay above. This is a 1-hour zone. 1-hour zones are very keen to getting walked all over, but they do hold demand. They do hold supply, in my opinion. Comes back in, and we would see a retest, a zone creation, and then a push up if it was, but we didn't see that. We saw price actually dip below the zone. So as soon as I got an engulfing here, I took the trade. So let me just drag this over here, and I will light it up. This trade ran a 4-1, a very tight stop. Why did I have a tight stop? Because I did not anticipate price to return back above this range. The range itself was the zone itself. As you can see, it kind of fit up pretty even keel. The highs here, the highs here. Let me zoom in a little bit. The highs here and the highs here show me that that's where price is consolidating. You've probably heard it called a lot of things, box and chill, consolidation, whatever you want to call it. That's what happened. So took the price on the engulfing right here, and we followed price down. So I'm just going to go to the 5-minute, and we're just going to fast forward a little bit and see how it played out. I've said before that my stops are always, or my partial rather, are always my stops. So we go up here and we see what our stop is. Stop is 9.3. Another trick that you can do is you can click on your trade and you can see 9.2, and you can copy and paste this box to this box, and it'll automatically make your trade set to your what I consider the risk-free of the position is a 9.2. Reason it's risk-free is because if you sell before this point, you are automatically deeming yourself to have a negative RR, and the equity curve that is going to be required to have that negative RR is really not sustainable. You need to have an RR above 1 at least, and even at 1, you still have to hit over a 50% strike rate on your wins, which a lot of traders can do, but do you really want that pressure on yourself? Try to push yourself to get a 1 to 2 minimum. Your strike rate's reduced to 33%, which is a lot more achievable for even novice traders if you're disciplined. So once you hit this point, risk-free means we tear our stop white, something cooler, something less angry, something less looking like worried money. This is just flat money right here because we've already parceled out and we made our money. When price returned, which it will, oh, it looks like I missed it. This is where price returned. I actually stacked this order, which was what I was going to get at. We came back into here and we hit this wall as if it wasn't anywhere. And this counted as that initial retest, like this initial retest. This broke away. I took the engulfing because I knew that we were below supply, so I felt we were going to fall. So this was an aggressive entry right here on my first initial, but this was the safe entry. The safe entry was coming down, and then it was the engulfing right here, in my opinion. That's the engulfing that I took a second entry on. I'm not going to map the trade out. It's the exact same parameters, a little wider stop, so obviously a little wider of the risk-free. Same setup, same way we do things. Just silent my phone for you guys. So it's the same exact situation. So we hit 2 trades on this. So that is basically 8%, 4% with partials turns into 2.5. So 2.5 stacked is 5. We lost 1 here. That's 4.5 for the day, or 4 for the day rather. So 4% on catching this trade. Now I didn't take it, but I'm just going to bring up the power of an order block. An order block is, and the reason I didn't take it was because I took a trade on UCAD as well. So 2 trades here, 1 on UCAD, can't get greedy. I was down 1% for the day. I ended the day up 2%, or up 1%. So I made 2% on the total account. These 4 to 1s, I'm not risking 1% on every trade. So for these 2 initially, I risked 0.5%. So it came down here and retested the overshoot. So I'm gonna go ahead and circle that, and we'll go over maybe what I would have done. I haven't really dug into it too much, so I'm kind of doing it here with you guys. So we come down here, and order blocks contain a lot of orders. That's because they have not been touched. It is very, very important that you understand that these order blocks, which are the originating of huge moves, another order block here, once they're tested, they're no longer as powerful as I'm giving them credit for. So first touch of this order block was substantial. It pushed price up very, very quickly. On the 15-minute, you can see how fast it wicked up. On the 60-minute, you can see even faster how fast it wicked up. So those are good trades to trade, especially if you're a scalper. If you can just get your stop wide enough to make sense, a 1 to 2 is not very hard to achieve. On this trade, though, you would have to have had a key 9 because it hit and it was instantly rejected. As soon as it touched it, 3 minutes later, we were looking at 12 pips up. I would not buy 12 pips up in this range. You're probably only looking at 2 to 1, and you're looking at a pretty wide stop. So not even a 2 to 1 probably. But if you have second time frame, you could probably cut down to a lower one. So a lower time frame, you got that double bottom pattern. It did not come back for a retest, I do not believe. No, I do not believe so. Oh yes, it did. Look at that. So you definitely could have got in here because we had this double top pattern, this double bottom pattern rather, and the retest of it. So the range I would be looking at, because I trade ranges, would be right here. So we came in, we shot down, we tagged the middle of the range, and then overshoot would have been right here. So not overshoot, my words are all messed up today. The engulfing would have been right here. So you could have taken the trade here, just below range, 12 pip stop, pull this up here, and I did not take it, but that's basically a 3 to 1. You could say a 2.5 if we're being moderate about it. Go to the 5 minutes so you can just see it play out. Power of order blocks, so you could have got that too. So really stacking all these positions could have been great. Still working on the stack. I'll probably bring out more information of that next time I do it. I usually don't stack my trades, so. Just ran through that really quick. I hope it was informative. If you guys have any questions, concerns, anything, go ahead and comment below. If this helped you, if maybe you catch a trade similar to this, maybe go to my Instagram up here at Stony Financial, shoot me a like or a follow, or just let me know how it worked for you, because I do things a little bit different, but I've seen a lot of success with it, and I think you will too. So motto right now is we've been through 2020. Don't be scared, guys. Pull the trigger on these moves. When you take losses here, don't let your psychology keep you from getting back into the trade. Once this trade has been lost, you can just consider it that it never happened. This trade never happened. Moving on, we're going to take this trade for what it is, an overshoot followed by a tap of supply and a push to demand. That's all it is, guys. So thank you for watching, and I hope you guys have a good trading day tomorrow.